Just wanted to let you guys know that there won't be any videos here on YouTube for a little while, but overall members, and if you're subscribed to the service, you can continue to trade and follow the strategy behind our members area there in our community with live mentoring and all of that stuff. Anyways, let's jump into the charts. Overall, if we take a look at the S&P 500 on the 30-minute chart, you can see we've had the trend go from a downtrend, the big washout sell-off low. It then went orange, and now we're green. We've had a couple waves of panic selling within this green trend. Those indicate oversold market conditions and where the market should start to find a bottom and start to push higher. Overall, we are in an uptrend, and during an uptrend, we typically see this red indicator over 3 more times than not. Because it is FOMO, but in an uptrend, people keep piling in, and that's what we want. FOMO is actually somewhat of a good sign. When you're in a strong trend, you want to keep seeing big waves of people buying in. The key with a rising trend here are the panic selling. When there's panic selling, those are pivot lows that usually the market is going to find a bottom. And of course, these panic selling indicators are in my book. If you are interested, Technical Trading Mastery, which is this book here. 7 Steps to Win with Logic. And in chapter 10, 11, and 12, I teach how to identify market trends. I identify how to identify these oversold market conditions where they're lime green or bright red in the background for an overbought market in a downtrend. I also identify these panic selling waves, an extreme panic selling, which that one happened to be an extreme panic selling wave that created a gap down the next day, a washout low. We talked about this the day before, saying expect a huge gap down and then the market to rip higher. We saw a very similar type of setup there. So all that can be learned. You can apply it to a 30-minute chart and pretty basic tools and indicators that pretty much every charting platform will allow you to create these ratios and these indicators. Now, from a short-term standpoint, if we just take a look at the S&P 500, we are getting close to all-time highs up here. Now, the market's had this big tariff kind of crash. It's rebounded, and now the market is at a tipping point here to figure out what it is going to do. Is it going to push a little bit higher, or is it going to break out and run and scream higher? Or is it going to roll over? Now, I think over the next couple of weeks, we could see a few different things. Obviously, if it just breaks out and keeps running higher, that will be great. We are long the markets with our strategy. If we look at the NASDAQ here, you can see the market put in a top. Our strategy got us out. We moved into a position that made money while the market fell down, and then we got repositioned back in. We've hit a target, and now we're just letting it mature. We're very close to 10% target on the next portion of this trade, and it's the same with the S&P 500. So right now, if the market just keeps screaming higher and we poke to new highs or rally through to new highs, that will be very good for our position. The other scenario that we could get here is simply the market pushes up a little bit higher. Maybe it pokes to nominal new highs but gets rejected. That would hit another one of our targets up here. And then from there, it could potentially break down and start another big cycle to the downside. So we just need to see how the market's going to unfold. Either way, if you're following my trade signals, we're sitting in the exact type of trade we want to be in. We are in the money. We've locked in gains. We have a stop in the money. If the market keeps going higher, we continue to make money. If it rolls over, then we get out and we still close out a winning trade. And we have not only avoided the big collapse, but we actually were able to generate returns while the stock market was falling and everybody else was panicking out. Now, from a sentiment standpoint, we are getting back into a sentiment level over here where people are getting very bullish, and they're going from thinking this was a dead cat bounce, which I still consider it to be a dead cat bounce, or a bear market rally at this point because it hasn't broken to new highs. People are getting very bullish. A lot of people are frustrated that they didn't get in on the move, and they're starting to buy in, and they're starting to buy very strong leverage ETFs to the upside. They're expecting things to go higher. But typically when we actually get into this sentiment, we could start to see this market get choppy. We might start to see the stock market here chop around. Whoops. If we take a look at this chart, it could chop around, start to give us orange bars. and red bars saying actually the underlying sentiment is starting to shift in terms of big money flows and things like that. And then eventually we go into this deep red, huge sell-off, distribution selling. So that's kind of where we're at. We're just in this free trade. No matter what happens, we're good. Ideally, it would be nice if it goes higher for us to lock in more gains with our SPY QQQ positions. We are also in the IBIT ETF around Bitcoin. Sitting there, we've locked in some nice gains and we're just letting it mature. It has potential to run up and keep moving higher. This will probably move with the stock market. So if the stock market hits new highs and rallies, we're probably going to see Bitcoin go up, hit our 20% upside target there, which we were close to at one point. If the stock market does roll over and get rejected, we're probably going to see Bitcoin roll over and sell off as well. So again, we're sitting pretty. We've already locked in gains. Our target, our stop is allows us to lock in profits as the market, if it was to correct. So either way, we're just letting the markets and these trends mature and do their thing. On another note, if we take a look at the S&P 500 seasonality chart, you can see here, we're right here. First week of June is now behind us. It's typically that kind of sell in May. At the end of May is when the market kind of goes into summer doldrums. It can chop around. So we are very close. We're right at the tipping point here where the markets might start to stall out. And of course, that makes sense because they've definitely exhausted their moves to the upside. Everything is at key resistance on the charts, so it naturally is going to want to run out here. So I'm expecting volatility. I'm expecting stuff like this. The market is going to trade sideways, maybe push a little bit higher, but it's just going to be noisy. It's going to burn time. Everybody always wants the markets to move big, but it always has a way of dragging things out with lots of volatility to try to really confuse you. That's what the market does best. If it doesn't shake you out, it will wait you out. In most cases, it does a very good combination of both, just like over here. So anyways, that's kind of about it. If you do want access to the exact ETF trades I do with my portfolio, when we know when to get out of the market, how to benefit and continue to grow our capital as the market goes down, and know when to get back in, and how to properly manage risk, portfolio allocations, positions, and all that stuff, you can go to my website, thetechnicaltraders.com. These are called asset revesting signals. Dramatically outperform the buy and hold and pretty much most other strategies with very, very little drawdown. You can see here most strategies have a 30, 40, 50% loss or drawdowns, many years with no returns. At this point, we are less than 6% max drawdown with the strategy, and we dominate in terms of returns long term. It's this consistent, solid line on the top. No matter if the market is selling off like the 2008 financial crisis, the COVID crash, 2022 little bear market, we can continue to rotate our capital into positions that continue to generate money. And you can learn about this if you want to learn more about the strategy asset revesting book here on Amazon or Chapters, wherever you want to go. You can get an idea of what we're doing from our website and the book. And just to give you a taste, if you want to see what other investors similar to you are probably saying, you can go to our reviews.io and check this out. We've got lots of 5-star reviews, and I'm sure you're going to read reviews here that connect with you. Again, this is really powerful stuff. This is all what our members are saying, and the benefits they get from it, and how much less stress they have, and how it just frees up a lot of time, this overall strategy. Anyway, there's 100 plus reviews there. There's some videos, there's some pictures, testimonials of members who just absolutely love being able to walk through this market knowing, hey, let's get out, let's move into something else, then let's get back in and rotate through these. And that is the whole point of our strategy, is we just navigate through these, and it doesn't matter if we're in a bull market or bear market, we can pull money out and go from there. And of course, when major setups happen, like in the precious metal space, which I think we're going to be coming into one for the precious metal space over the next, within the probably 6, 8, 12 months, I think, an opportunity for a little bit of a reset in the metal space and the markets, and then to reinvest in some pretty key levels, not only precious metals, but there's going to be some top dividend stocks that are amazing, or funds to buy after a financial reset. There's going to be a lot of really cool other discretionary trades that we'll be able to get into, including uranium, probably Bitcoin, a few other plays like that. Anyways, that's it for now. Hopefully this gives you a little bit of insight. Just be prepared. The precious metal space is still in a bull market. You do not want to pick the top in this. Either you just be very cautious. Gold is primed and ready to continue to push. The stock market is trying to figure out what to do. And it's all about managing positions and risk. Talk to you soon. Bye-bye.